Are we about to witness the greatest housing bubble of all time pop? Well, folks, you already know how I feel about this situation. It is a reset underway. Some markets are still going up. In fact, the Case-Shiller Index, which tracks the 20 largest metros in the United States, it is reaching new all-time highs. But despite that fact, we're going to dive into the details here in this real estate reset. If you guys appreciate the real estate content, please make sure you guys subscribe, hit that notification bell. And I created a playlist on my channel titled Real Estate Reset, where this, along with all of our other updates in regards to this asset class, will be posted for you. I know it's not as sexy as crypto, but it's equally as important for us all to understand. Let's take a look at what I'm talking about. This one here from the Kobesi letter. Inflation-adjusted home prices are now near a record 100% higher than the long-term 130-year average, according to Reventure Consulting. Even at the peak before the 2008 financial crisis, inflation-adjusted home prices were about 10% below current levels. Furthermore, prior to the year 2000, home prices were almost directly in line with inflation. The only two times in history that home prices were nearly 100% above the 130-year average were 2006 and 2024. Something needs to give here. Let's take a look at this chart here from Reventure Consulting. Once again, this goes all the way back to 1890, 130-year average. And you can see during the Great Financial Crisis, or the run-up to it, how high that bubble blew up. And you can see how much further along we are this time around. Literally in the biggest housing bubble of all time here in 2024. We move on over to this new update we got just a couple days ago. The home price growth moderating in June, but prices still reach record high, Case-Shiller says. So remember what this data point tracks. The 20 biggest U.S. metro areas set another record high in June, but showed signs of a prolonged and gradual slowdown. When you look at the core logic, what you see is that we had an index rising by 0.4% in June compared with the previous month. But we look at here, the home prices in the 20 major metros surveyed were up 6.5% in the 12 months ending in June. That's a deceleration following an increase of 6.9% the previous month. Economists surveyed by the Dow Jones Newswire and the Wall Street Journal expected the 20-city index to increase by 6.3%. A broader measure of home prices, the national index, rose by 0.2% in June and was also up 5.4% over the past year. All numbers are seasonally adjusted. When we look at the key details, New York posted the biggest year-over-year home price gains in June. Prices were up 9%. Home prices grew the slowest by 0.8% in Portland, Oregon. So we look here, all positive growth across the major metros. Okay. Now, when we look down here, the median price of a resale home was $426,900 in June, and the price of a newly built home was $416,700. So when they summarize the big picture, they say home prices continue to reach new heights, but the pace of appreciation has significantly slowed. With more homes being listed for sale, home buyers are finding more options in the market, and as supply increases, prices cool. The number of active for-sale listings was up 18% from a year ago as of mid-August, according to data from real estate brokerage Redfin. Now, one would ask, why are the prices still going up, even though we're seeing more inventory, even though we're about to talk about mortgage demand falling to a level that we haven't seen since 1994? How is this happening? Well, I would simplify it and summarize it by saying that what you have is homes on the higher end, right? This is $700,000 plus, $1 million plus. Those homes are still moving at a relatively good pace. And so as this data is tracked, and once again, this is the major cities where home prices are elevated, it's tracking higher sale prices. When you look across the country, more broadly speaking, you're not seeing the same type of activity that we're seeing at the lower end, right? And so although the high-flying markets are still running up, prices are still increasing, what we're seeing across the board here is a slowdown in activity, in volume, and I think that this is a precursor to that Case-Shiller index starting to roll over and that data point starting to come back down. And what am I talking about? When we look here at what Nick Gurley presents, one major problem for the housing market is that home buyers are not responding to lower mortgage rates. Rates have dropped from 7.2 to 6.4% over the last 3 months, and there has been no bounce back in buyer demand. In fact, mortgage purchase applications just came in at a level 9% below last year, and remain at the lowest level in decades. Rates are going to need to drop by a lot for it to make any impact on buyers, probably into the low fives. And so this adds to what I'm saying in my thesis, because folks that are buying homes for over $1 million, a lot of them are showing up with cash. A lot of them have equity. A lot of them don't need the mortgage. And so they're just moving in, and those purchases are happening with cash. A lot of investors still in this market as well. Even though the data is starting to slow up, investor purchases are slowing down, they are still there. They are still present. And so for those that do need a mortgage, first-time home buyers on the lower end, 300 to 500,000, that median home coming in at about 426,000, those folks still need a mortgage. And the mortgage demand is still falling off. And so this is why we're still tracking record high prices. That's why the bubble is still inflating to new all-time highs. Meanwhile, we're starting to see it break on the back end. And, if you want another data point to confirm that, well, look no further than what the home builders are doing. 1/3 of home builders are slashing prices as confidence in the market falls to an 8-month low. Builders' use of incentives to boost home sales reaches its highest level since April of 2019. They are doing everything that they can to sell these homes, and they're still struggling, with 1/3 of them having to slash prices. Builder confidence fell for the 4th month in a row in August as elevated mortgage rates continue to spook home buyers. Sentiment among home builders is at the lowest level since December of 2023, with a lack of sales stemming from buyers sitting on the sidelines due to high home prices and mortgage rates pushed. The the National Association of Home Builders monthly confidence index to 39 points in August, the industry group said on Thursday. The August figure fell short of economists' expectations. A year ago, the index stood at 50. So this is where we're at right now. It is starting to break. On the high end, those with cash, investors, still present, still there, which is why we're getting these data points, why we're getting these headlines that we're achieving new all-time highs. But this is your time if you're looking to buy, if you're looking to invest, as the deals come online, as over 1/3 of the builders are forced to slash prices, as more and more sellers are forced to slash prices. Now is going to finally flip towards a buyer's market, one for us to take advantage of. Now, if you've been trying to sell your property, if you've been considering that, I think that you're at a point now where it's about as good as it's going to get. June is the peak selling season. Every single year, that is the seasonal peak for real estate is June. So we've reached that. That's what the Case-Shiller Index was polling from. And so now we're starting to roll over, and now you're going to start to see the correction as we head into the fall and the winter time. So now I think is the time to prepare. You need to be, working with your mortgage broker, working with your agent, and being ready to pounce on the deals as they come this fall, winter, and into 2025. Now, once again, the rates are starting to come down, so it's a perfect convergence of where you're going to be able to get better debt than you were, just 6 months ago when rates were above 7%, approaching 8%, right? Now we're back down at 6.5%, and if the Fed does cut in September, and if those rates start to come back down, we're going to be able to get those mortgage rates back down below 6%, closer to the 5%, which, I think is going to be a perfect opportunity right as inventory starting to flood the market as well. Perfect opportunity for you to move in, whether you're a first-time buyer, whether you're looking to move into a new home, or whether you're looking to invest in these markets. I think that the buyer's market is starting to present itself, and it's going to be a great opportunity. Once again, real estate reset is underway, so you got to understand your location. Location is the old adage. It still is present here today. You have to understand your market. This is a local, regional situation, and so it's tough to speak on the market generally, but what I'm tracking right now is that we're peaking out, we're about to roll over, and across the board, we can generally say opportunities are going to present themselves better than the deals that we've been getting over the past year or two. So now is the time to prepare. I want you guys to comment down below. Let me know what moves you're looking to make as we head into fall, winter time. Also, as some of our other investments start to appreciate, XRP, your other favorite cryptos, as those start to appreciate and we look to roll over into other asset classes and investments, I want to hear what your strategy is for rolling over some of your profits into real estate. Are you looking to become an investor? Are you looking to partner up with others? Let me know what the game plan is as we head into this real estate reset. The data is starting to confirm our thesis. I'm getting prepared. I hope you guys are as well. If you appreciate our updates, please make sure you like this video. Help me out by sharing it out far and wide. and we got more content on the way. We'll see you guys in the next one. God bless you all.